Hello and welcome to Forex Brokering's view and update on selected markets. It's Friday 28th of August. There's a significant rise in volatility on the currency market this week, and the recent sharp movements should be taken as a little alarming bell as to what is expected during September's trade. Next week's economic calendar is filled with major macroeconomic data which will surely bring a lot of interest from traders around the world, with Reserve Bank of Australia and European Central Bank announcing bank rates, EU's inflation and GDP numbers, as well as change in unemployment rate and NFP in USA, to name a few. As the currency market is being known for sharp movements during or after publication of such reports, we strongly advise you to take some time to analyze any open trade and reconsider your exposure on the market to avoid any disappointments. Let's move on to our view and technical analysis on selected currency pair, and today we selected the Aussie against the US dollar as we're noticing an increased interest on the AUDUSD symbol. The current exchange rate between 0.71 and 0.7150 is attracting more and more traders as this area falls onto the 61.8% retracement from the lows of 0.48 back in early 2001 to highs of 1.10 back in 2011. The Reserve Bank of Australia decided not to lower bank rates during the last 3 meetings, which might have come as a little surprise since other two commodity currency central banks in Canada and New Zealand did adjust bank rates on recent meetings. With China being in process of devaluating its currency, we might be in for a cut in the RBA's interest rate. The current technical setup based on where the market paused this week and the Fibonacci retracement suggests a potential area of where a new long-term uptrend could start, with first resistance around 0.7850 followed by the 0.85. Each September during the last several years provided a guidance of where the market is likely to take the AUD/USD for coming months. Let's not forget that on September 17th, Fed will announce its bank rate decision, which is widely anticipated. If after the publication of RBA's bank rate next week we are going to see a sharp drop towards 0.70, we might be in for a fast-paced move towards 0.6750, followed by next bearish target around 0.60, 0.61. If you're trading the AUD/USD, then it is advised to also be on top of the price of gold and development in China, as these two factors play an important role for the future of AUD/USD rate. Briefly on gold, the price of 1118 appeared to have formed a support on the 61.8% retracement from lows to highs of traded prices in August, which is likely to attract more buyers for the coming week of trade and push the price towards 1200. Gold, being highly volatile, should be traded with extreme care next week as we continue to expect increasing volatility and sharp movements. Break below 1118 could see sellers pushing the price towards 1100 and lows of 1080. That's all for today from us here at Forex Brokering. Don't forget to check out our previous analysis and let us know what you think in comments below. Next week we're going to deliver more updates on the currency markets, and on behalf of Forex Brokering I wish you a great weekend and like to remind you about using stop orders on each trade.